Hello and welcome back to Simple Money Podcast, Canada's own personal finance podcast that covers those personal finance questions that are important to you and your family. I'm your host, Matthew Sewick, also known as the Friendly Financial Coach. So suffering from a disability is a serious matter and unfortunately can strike anyone. The definition of a disability is usually split into short and long term. Short-term disabilities are usually defined as disabilities that last for approximately 6 months and under. On the other hand, long-term disabilities are anything beyond that. The sad reality about short-term disabilities is that they will challenge a household and possibly push them to the brink. In these situations, there will be a drop in household income while expenses will slightly dip due to reduced discretionary expenses, stay flat, or in the worst cases, increase due to new expenses like medical treatment or prescriptions. Today we're going to explore the main short-term disability streams of income that are available. Hopefully this information will never need to be used, but knowing the ways to protect yourself in advance will help you set up a plan and allow you to not miss any options. Next week, we'll be looking at the long-term disability options. So the unfortunate reality is that if a disability strikes, it has the potential to completely devour a household's finances. Depending on the circumstances, income will drop to anywhere from 0 to 70% of existing earnings. This will also happen during a very emotional time where one will be limited by their disability. It's also a good practice to understand the types of coverage that you currently have and if any changes need to be made. Understanding your available income streams can help reduce the financial impact and help you navigate a very challenging situation. The main sources of short-term disability income come from workplace or private insurance, an emergency fund, workplace compensation programs, and EI sickness benefits. So usually the first line of defense is short-term disability insurance through a workplace or EI sickness benefits. Short-term disability insurance offers regular payments up to approximately 6 months. These payments are a set percentage of earnings and usually begin after a waiting period that's commonly a month or so. The exact terms of a short-term disability plan depend heavily on the insurance agreement through work or a private plan. As a general rule, it's always a good idea to have easy access to this information and the steps needed to apply. Overall, short-term disability payments will typically not exceed about 60 to 70% of your gross income. This low percentage is in place because the insurance industry sees earnings above this amount as a disincentive to return to work. This belief is obviously questionable, but one that we need to work within. If one is working but doesn't have short-term disability insurance, then they may be eligible to receive EI sickness benefits. These benefits pay out 55% of your average weekly earnings and last for 15 weeks, although the government is currently talking about extending this to 26 weeks. Translated to dollars, the most that one can receive from EI sickness benefits is $562 per week. This amount is also subject to upfront taxes, which means that the amount that you receive is going to be less. Having an accurate understanding of your tax situation is important because if one doesn't withhold enough taxes, then they can be served a really large tax bill when they file. The exact same situation surprises a lot of people that are on maternity and parental leave. To receive the EI sickness benefits, one needs to qualify for EI and has to have used up all of their sick leave. In cases where an injury happens in a workplace or due to work, an individual may also be eligible for workplace compensation. Workplace compensation is provincially managed and rules vary across Canada. For example, the board that manages workplace compensation in Ontario is the Workplace Safety and Insurance Board, more commonly known as WSIB. Every province has different rules when it comes to worker compensation, but all will include some form of loss of earnings payments that may also include payments for non-economic losses. Some other benefits offered include a component put aside for retirement savings, loss of expected future earnings, healthcare benefits, and other assistances for different types of illnesses. And this short-term option can become a long-term option. Depending on the situation that makes the workers' compensation arise, one may be eligible for more longer-term payments. And then finally, as a last line of defense, we have your existing resources. The preferred source of this is to have an emergency fund with 3 to 6 months of your household's monthly expenses. These funds should be in an easily accessible location that is not subject to risk. such as a high-interest savings account. This way you have a backup in case there are any budgetary shortfalls when you're on short-term disability. So those are the major options that are available to us when we're confronted by a short-term disability. Join us next week when we explore what happens when a disability turns into a long-term matter. Thanks again for listening to Simple Money. If you're enjoying the show, please consider rating or sharing the show. Any type of support is very helpful. And as always, you can contact me directly at info@ffcoach.ca, or you can find me on Twitter at @f_fcoach. Take care and talk to you next week.